Hey everyone, welcome to another episode. This is JR, founder and CEO of Social Market. My partner Leon Hitchens could not join us like usual. He was actually pretty sick today, so I'm going to be taking over another week. So funny enough, this is the 25th episode of Social Ledger Report, and it's been a while. We've just started in 2025, and we have, just like every other episode, we have another great episode for you guys. Today we're going to cover several amount of topics. So first of all, last week we covered the Trump and President Xi Jinping's deal falling off, and Trump posed a 100% tariff plan on China, and that backfired. So we're going to talk the aftermath. And there's even some insider trading involved. So we're going to discuss that here in a moment. So after that, we'll talk about Trump's crypto. It's meme coin. I believe the Saudis are the ones who are investing, and there's quite a bit to talk about there, so we'll cover that here in a moment. Next, we'll talk about Ripple actually putting a $1 billion acquisition to GTreasury, which is pretty big. Next, crypto founder and influencers found dead, and it might look like suicide, but we'll cover that here in a moment. Next, the SEC is pushing for crypto innovation given its latest report, which we'll cover that here in a moment. And the last story will be Kraken made a $100 million acquisition for another big derivative company here in the US. And just like Coinbase are pushing for derivatives here in the US. All right, so before we continue, make sure you like this video, subscribe to the channel, and click that bell icon. It costs you nothing, and it helps us to continue pushing this type of content. And if you guys want to see any particular kind of content, feel free to send us a message on our socials, which will be in the YouTube's description, and feel free to leave any comments. As always, we like to go over the markets. Okay, so this is kind of like the market overview at a glance. We're seeing that altcoin season index is still leaning on Bitcoin. Fear and greed is still at extreme fear, although I think last week was more on the fear side, or I guess throughout the week we were looking at it and it was under fear. US inflation is still at 3%. Gold is actually back at the $4,000 mark. I know it went down for a moment to 3,900 after the tariff deal was announced, but this is pretty indicative of what's to come in the future, which, as you may already know, if people are putting their money on gold or anything that's outside of the US dollar, it's usually a good indicator that people are skeptical on the power of the US dollar. So right now we're seeing gold is at 4,300. Invesco QQQ is right above 600. The DIA Dow Jones is at 461, and S&P 500 is sitting at above 6,664. So that's pretty much the market overview at a glance. So let's go over Bitcoin now. So in the last week, if you guys saw last week's episode, we saw that Bitcoin had reached a new all-time high, and then the China deal stuff happened, and then it fucking went down. And then it recovered like earlier in the week, but now it's actually below $110,000. So it's at 107,000. So that's pretty much the performance on crypto this week. So let's talk about this historic $19 billion liquidation event that is tied to the Trump deal with China after all the tariff fiasco. So again, last week we covered kind of what happened and what was the origin or the genesis of this new China tariff deal with, both president of the US and China just having issues coming to an agreement. So amid Trump's announcement of the massive tariffs on Chinese goods, triggered the largest single liquidation cascade in crypto history, as you may already know, which already wiped out over $19 billion in positions and affected over 1.6 million traders. So this is from Animoca Brands and TLDR of what went down this week. A sudden US-China tariff announcement caused the largest liquidation in crypto history. You already covered that. $19 billion in market cap wiped out within hours, within exchanges buckling under pressure. Anon trader walks away with $190 million in profits. So this is the subject that we'll go over here. Now, CoffeeZilla released a similar video, which is actually really interesting. It is a much longer video. I recommend you guys look at it. CoffeeZilla is really good at covering those kind of things. But this is from someone else. I've never met this account before, but I saw it. I think it's a good video, so I'll play it here.
We just witnessed the biggest liquidation event in crypto history, and it all started with Trump, China, and tariffs. So here's what went down. Trump announced a 100% tariff on China, and markets went absolutely
Okay, so this is kind of what we talked about. I don't want to interrupt it. If you guys want to watch the video on your own, you can. So this is where it kind of just starts talking about the insider trading. So I'll let it play.
Fashion, he backtracked with a post saying, "Don't worry about China, it'll all be fine." But the damage was already done. And get this, while everyone else was losing, one trader in Hyperliquid shorted BTC and ETH a minute before the tariff announcement and walked away with 190 million in profit in under 24 hours. Now, of course, people are asking, was this just genius or was it insider trading? On-chain investigators are already digging into who this trader might be. So between Trump shaking up the markets and a whale pulling off one of the boldest trades we've seen, this week proved again how fast things can flip in crypto. Make sure to follow us for weekly crypto insights.
Okay, yeah, so that was the video. So one thing I didn't mention was, and she kind of went over that video, so Binance and Coinbase were actually glitching while this was all happening because a lot of people we were kind of seeing like a very soft bank run, except people were going to exchanges to withdraw their crypto, and Binance is probably saw one of the biggest ones. So this is from Crypto Emery, calling Binance a scam just because they weren't able to withdraw their money in time or something. So here's what it said according to this person. Binance paid over $80 million to users after the USDE lost its peg. So that was a stablecoin, USDE. They are refunding $400 million to those who got liquidated. BNB Chain is refunding $45 million to users who lost money trading meme coins. They don't have to do any of this, except they don't profit from liquidations. But why are they paying all this money? Because Binance was at the center of this whole game. If you're still defending Binance, you're an idiot. So I don't know who this person is. I think it's a very valid point. Now, I don't really use Binance on my own, if I'll be honest, but I think, this is kind of one of those cases where people who are using crypto or any type of product ever at all, there's going to be some unsatisfied customers. So it is especially tricky with crypto because, you only have a limited time to get ahead of the market. And especially when the entire market is seeing this liquidation and scarcity, or fear, I should say, things are going to get a lot more difficult for some people. In this case, they weren't able to withdraw their money from what it seems. So that was one example. Now, let's go a little bit more into the insider trading. I'm going to try to be as brief as I can on all of these things because we have so much to cover. So on this one, let's go a little bit more into the insider trading of the $190 million. This person, Jacques Ma, says, one of the worst days in crypto history happened yesterday. Traders on Twitter lost everything. Over $19 billion were liquidated. Scary times. But one insider made 9 figures on a short position he put in 30 minutes before Trump's tariff announcement. So again, this is a 2-minute video. I'm only going to play like half of it. You can watch the entire clip. We'll put it on the description bio. But you can also watch CoffeeZilla's video, and he actually made another good inside description on this. Let's play the clip.
Day for crypto traders. There was $19 billion in liquidation over a 24-hour period. To put that into context, COVID crashed, there was $1 billion in liquidations. FTX crashed, $1.6 billion in liquidations. Yesterday, $19.31 billion in liquidations. Here's a look at some wallets. You will see behind me, there were multiple with over $15 million lost in a 24-hour span. Now, crypto didn't go to zero. Bitcoin, Ethereum did have a tough 24 hours, but they were only down 10, 15% at max. But a lot of crypto traders trade on leverage and with meme coins and with very risky assets. This guy behind me, I have a friend that was close to $30 million net worth, almost a decade in crypto. Lost the whole $30 million yesterday in 10 minutes on cross margins. An entire decade and multiple generations he could have retired, all gone in 10 minutes. Now, trolling is common in the crypto community, but it didn't seem like it was happening yesterday. We have to take this guy's word, but he said that he lost $15 million lost. He was invested in something called Sui, and he said this industry is a scam. Goodbye forever. I'm liquidated.
Okay, so he's kind of just going over people's personal examples. This is the short that actually matters, but yeah, this is just kind of like covering some of people's aftermath after the crash, which is pretty interesting how it was a much bigger liquidation event than fucking COVID, because I remember you look anywhere, you look at Bitcoin, the S&P 500, gold, everything went crashed down like 5 years ago with COVID. So anyways, this is the actual liquidation.
In short Bitcoin,
or excuse me, the actual insider trading.
And closed with an $88 million profit. The insider who opened his trade 30 minutes before the Trump tariffs closed his trades for $192 million in profits. And then he withdrew everything from Hyperliquid. Now, this could possibly just be good timing, but let's call a spade a spade. And of course, Jim Cramer told us to buy crypto just a few days ago. And automatic drop.
Gosh.
The crypto trenches are dangerous.
Oh yeah, so that's pretty much it. You guys can, we pretty much saw most of it, but if you guys want to watch the entire video, it's right there. So that's pretty much what happened. It's pretty scary. Any insider trading that's happening could be associated with the Trump network within their own circle. So we'll see what happens. It will probably never be addressed if we're being honest, because crime is legal. So just y'all be careful out there. All right. So more under Trump. So over the week, there's been some developments. As you already know, he released a meme coin. It's the Trump meme coin. And at some point, maybe during like the summer or like May time, he was actually telling people, hey, if you buy my coin, you're actually going to get, you know, if you hold a certain amount of my coin, you will actually get a dinner with me or something. I don't think he said that himself, but it was like his, you know, some of his friends or people within his circle who were the ones who shared that information. So anyways, political drama heated up with speculation that the Trump administration might pardon former Binance CEO ZZ. So this is from StealthX or StealthX.io. Here's where we talked about it. We just talked about it among other relevant articles, so that's pretty cool. But that's not everything. So this is actually from popular.info, and this is Melanie Darjo. I think that's how you pronounce her name. So this is what's really interesting. The UAE bought $2 billion of Trump's crypto and gets computer chips. Saudi Arabia gave Kushner $2 billion for a new Trump tower and gets weapons. Qatar gives Trump a private jet and a $5.5 billion real estate deal and gets U.S. military protection. This is how bribe works. So this is the link that will take us to the entire article from Popular Info, Quid Pro Presidency. So it's funny how they do a little wordplay with quid pro quo, but just go over this a little bit. And again, this is the kind of news that you want to watch here with us at Social Ledger Report, because you're not going to find this shit anywhere on CNN, Fox News, Newsmax, you name it. You're never going to find it on mainstream media. So anyways, nations that have bestowed lavish gifts to President Trump or enriched Trump and his family by striking business deals with Trump-connected companies have later received extraordinary benefits from the Trump administration. The apparent link between personal benefits and official acts has fundamentally changed the nature of the most powerful political office on earth. For example, on May 21st, Qatar gifted the United States government a luxury 747 jet, which originally cost over $400 million for Trump to use as Air Force One. The plane was designed by famed French interior design from Alberto Pino Cabinet and boasts gold-colored walls and gold furnishes reminiscent of the president's opulent home in the Trump Tower. The cabinet is decked out with winding staircases, plush carpeting, leather couches, and more. After Trump leaves office, the plane will reportedly be transferred to the Trump Presidential Library, making it available for Trump's personal use. So this is really old news. We've already known this if you've tuned in to just news that have been happening, even covered by some other outlets. But this is what's new. But Trump did not stop there. On October 10th, which was just 8 days ago as of recording of this video, Secretary of Defense Pete Hegseth announced the government will permit Qatar to establish a military presence on U.S. soil. The Qatar government thanked Hegseth for allowing the creation of the Qatar Emery Air Force facility at Mountain Home Air Base in Idaho. The facility will host Qatar F-15 fighter jets and pilots who will train alongside U.S. troops. So I think that's really interesting because we're essentially allowing a foreign government to get in American soil. How is this crypto related? Well, here's the part. In 2024, a few months before Trump won the presidency, the Qatar government was one of two investors in $1.5 billion funding round of the Affinity Partners, an investment firm founded by Trump's son-in-law, Jared Kushner. Although Kushner had pledged not to be involved in policymaking in Trump's second term, he has re-emerged as one of Trump's top foreign policy advisors. Several other countries have replicated Qatar's financial approach to Trump and his family. It has paid off. So, here's the other development. In May, the United Arab Emirates, or UAE, through its state-backed investment fund MGX, purchased $2 billion worth of USD1, a stablecoin issued by Trump-connected crypto firm World Liberty Finance. Stablecoin issuers make money by charging fees for issuing coins and earning interest on assets held in reserve. The $2 billion purchase should generate tens of millions annually for WLF. Trump and his family members own about 38% of the company. So this is what we're kind of talking about. Like, that's the genesis. The genesis, essentially, it's a long article, but the genesis is the Trump presidency is essentially using crypto to get gifts that you normally wouldn't be able to get through being president or holding office. So, I mean, you do what you will with that information. I'm just a journalist here covering everything that may not be available by mainstream media, which again, you should check out our channel and check out our other videos for this kind of content. We'll leave the article here in the description as well for you guys to look at, to kind of just put Trump's matter at rest, because we're really just here to cover the economy and everything that's happening with insiders. I'll leave it at this. From Ash Crypto, breaking. President Trump says China wants to talk. We like talking to China. Okay, excuse me. If I'm quoting Trump, I need to quote him correctly. President Trump says China wants to talk, and we like talking to China. U.S.-China trade deal is inevitable. So this is kind of like the aftermath again of the just the whole issue that happened last week. So I'll go ahead and play this video, and then we'll pretty much move on to the rest of our other stories.
And we are in a very strong position because of tariffs. We're in a very powerful position because of the fact that we have tariffs. If we didn't have tariffs, we would be in a very weak position. We would be in a weakened state. But with tariffs, we've made hundreds of billions of dollars, not only from China, but from others. And China wants to talk, and we like talking to China. So we have a very good relationship, and we're going to be meeting in South Korea a couple of weeks. And we are in a very...
Great. Yeah, so they're still talking. We'll probably learn something next week amid the government shutdown. So we'll keep you updated for any developments. That was pretty much anything related for Trump for this week's episode, but we still have some more interesting topics that we do want to talk about, and this is more like the business economy side. So now our next story, we'll talk about GTreasury being acquired by Ripple for over $1 billion, which is an insane amount of deal. There's very few companies that ever get the $1 billion status, and just to kind of put things in perspective, every day there's like about 10 to 100 companies being created worldwide. So that's pretty significant. None of them hardly ever get to the $1 billion valuation, let alone be part of this kind of deal. So Ripple, as you may already know, they're the main parent company of XRP, the token that everyone loves. So GTreasury is Treasury Management System and Solutions, TMS software. So they're acquiring, again, GTreasury for $1 billion, which is pretty significant. It was part of a broader TradFi crypto integrations like Citibank's planned 2026 crypto custody service and global banks exploring G7 peg stablecoins. And this is from Zetify. So Zetify, this is a post. We'll leave the post here in the description, but he kind of gave us some top headlines over the week on Twitter, and that's where we're kind of covering this story from. However, this is from Yahoo Finance, and it kind of gives us more of a detail on this. So we'll kind of just, speed run this. So Ripple acquires treasury management firm for $1 billion amid DAT boom. And it gets more into it here in this article. So fintech company Ripple announced Thursday that it bought software firm GTreasury for $1 billion in the crypto giant's third major deal this year, adding a company that can support the growth of company management crypto in their corporate treasuries. So if you guys don't live under a rock, you guys might remember that for the longest 4 or 5 years, Ripple and the SEC have kind of been added with their lawsuit, and Ripple has probably spent like millions, if not hundreds of millions in lawsuit and legal fees just to fight this lawsuit. So it's really interesting to see them kind of turning around and actually spending over $1 billion, which probably don't come in liquid cash, but in like token reserves or in other kind of things. So it's really interesting to see the, development of Ripple in the aftermath of the lawsuit. So anyways, Ripple, the company whose founders created major crypto asset XRP, said the acquisition would help the company move money and unlock idle capital. The deal is the latest example of a big digital asset company pushing into the mainstream. I mean, crypto's already been mainstream, at this point, but I mean, that's an interesting development. GTreasury offers a platform that allows finance teams within companies to better analyze and manage their cash flows, quote unquote. For too long, money has been stuck in slow, outdated payment systems and infrastructure, causing unnecessary delays, high costs, and roadblocks to entering new markets. Problems that blockchain technologies are ideally suited to solve. And this is from Ripple CEO Brad Garlinghouse. And he said in this statement, and this is from a post on Twitter. So he says, he continued on X. The past few years have been reminded this industry-wide payments, first and foremost, is the primary use case for crypto and blockchain, adding that the deal would reduce friction and cause outdated payment systems. The announcement said Ripple would be able to help the financials world shift towards digital assets as more top companies deal with managing stablecoins, tokenized deposits, and other assets at scale. If you want to read the rest of this article, we'll leave it in the description. So again, I've already said it, but I think it's really interesting to see how much far Ripple has come out on the other side of their lawsuit, which again, it was an unfair lawsuit. I'll give it to them. But yeah, I mean, the CEO of XRP makes a stupendous, amazing claim why crypto is even valid beyond just meme coins and gambling, if you will. Like, it's real world use cases. It makes money much faster. I don't know if anyone who is watching this is, has seen like Brian Armstrong's, the founder of Coinbase, his pitch deck when he first got into YC that essentially helped them get to the next step, which eventually led them to be where they are right now as a big of a company, and now including crypto into people's 401ks. So there was this one compelling argument that he said in his pitch deck where he was, and this is back from 2012, and it's just a few years after Bitcoin came out. He pretty much said, Bitcoin is this new novelty that essentially makes money faster, it makes it more affordable, and it cuts the middleman between payment systems. Now, it kind of puts Coinbase as a middleman, but they facilitate this technology to be used by common users, because before Coinbase, they essentially, it was really hard to send Bitcoin and to use Bitcoin or to even buy it. But that's just besides the point. Like, this is just the point that I'm trying to get is crypto is widely being used here to accelerate money payments or money financial systems. All right, so that was, in any case, the latest development with Ripple. Now, our next story, this is a more morbid story, but we got to cover it. So, a tragic death of crypto investor Konstantin Galish. A somber story gripped the community. Influencer and investor Konstantin Galish was found dead in his Lamborghini after losing $65 million of investor funds in futures trading amid the market crash, highlighting the mental health toll of crypto's volatility. So this is from a post on Twitter. So this is from Crypto Psalm. He left this comment where he said, bro took his own life after losing $65 million of his investors' funds to futures trading due to Trump tariff announcement on China on October 10th, which, it's very tragic. So more on this is why I will keep saying this. Don't give motivational quotes when the market is red. You don't know what people are going through. We know every dump is an opportunity for new entry. Keep that to yourself and give someone hearts instead. This way you're letting those in laws aware that they are not allowed. I'm not sure what he was trying to say there, but please, we need to start displaying some atom of love in this space. We are not rivals. We're all fighting in a common goal, get rich. Rest in peace, CEO, Cryptology. So it was really interesting. So this is kind of like a comment to the original post from Whale Insider. Just in, crypto investor and influencer Konstantin Galish found dead in Lamborghini amid historic market crash. It looks like he offed himself. Let's look at the actual parent story, because there's really not a lot here. This is kind of just, oh, by the way, this is what happened, which again, this is not something you're going to find on any other kind of traditional media. Oh, why are we even talking about it? I think it's a relevant story. Anyone who might off themselves for any reason is already terrible, and it's worth covering, especially if it's someone who, had major influence in the market or in what we talk about here in Social Ledger Report, which is crypto. I mean, it's tragic. It feels like, the market crash is what led this person to off himself. And if he was dealing with investors' money, because when you get money from an investor, it's not really your money. It's money it's money that they essentially lend you to do whatever you promise you would do with their money, which is usually giving them a higher return of said money. That's usually the way it goes. So we'll probably learn more of that later if people cover more, or if there's more things for me to cover. So, pretty short story, but it is what it is. Our next story, we'll talk about the SEC with crypto, and it's actually pushing for more innovation exemptions. So what this means is the SEC current chair, his name is Paul Atkins, announced plans for an innovation exemption framework for digital assets by this quarter or early 2026. And this is aiming to lure builders to build in the US. All right, so this is from Yahoo Finance. We're 10 years behind. SEC chair vows to fast track US crypto progress. SEC Chair Paul Atkins admits US is 10 years behind in crypto regulation, calling it Job 1, as agencies plans innovation exemption by year end, moving away from enforcement first strategy towards collaborative framework. And again, it's so amazing to see this. Me being someone who was building a different kind of product on crypto, right now Social Market is mostly doing crypto coverage for every trader. Little shameless plug there, but before that we were doing social finance, and it was actually kind of a tough time because, and if you don't mind me just giving you like a quick minute rundown, we were building on the decentralized social blockchain known as DeSo, and this is before Farcaster even became a thing, before Base app was a thing, which is where it's the most popular crypto space at the moment, social media wise, aside from Twitter. So what's really interesting is we were trying to launch before, and the Apple App Store was giving us issues. They were deeming us as money transmitters, and we needed to get some licenses and get, any sort of, security distributor license, which we're already talking about hundreds of thousands of dollars for that kind of deal. And, we went to a lawyer that is based on New York, because New York is another crypto capital of the world, even back then, like a few years ago. So one thing they tell us is you need to, according to the SEC, you need to file for a money transmitting license. You need to get a KYC, or otherwise known as Know Your Customer, and anti-money laundering licenses and compliances, blah, blah, blah. Obviously, that killed our business, because we were like, okay, we're talking about maybe $1 million every year with like compliance and legal fees. And this lawyer, he was going to make a fat ass check if we were to continue working with him. Which obviously, this was our first startup. We knew nothing about what we needed to know, so obviously that went down to the bottom. Then now, we're seeing almost like a day and night cycle of like what kind of compliances we need for small or first-time business owners to comply with in the U.S. Anyways, that was very little, background on what we were doing, but let's actually talk a little bit more on what they're trying to do here for the next 10 years, because it looks like we're 10 years behind. Well, I think they talk about the first 10 years. And we'll leave this article in the description as well. So it looks like this article was from October 16 on Thursday, so just a few days ago. It says, SEC Chair Paul Atkins has acknowledged the U.S. is 10 years behind in crypto regulation and pledges to fast-track crypto progress. According to him, the crypto aspect is our job one, making it a priority for the regulatory body. During the DC FinTech Week event at the Amazon headquarters on Wednesday, Amazon stated that the SEC intends to build a robust framework to bring back industry participants who may have left the country, enabling innovation to flourish. Atkins vows to fast-track U.S. crypto progress. I'd like to say that we're the Securities and Innovation Commission now, he added. And there's a source on YouTube, which again, you can look on this on your own. And I think it's interesting because DC FinTech Week event, and it's right around the timeline where all across the country in the US, we're seeing these startup weeks, these tech weeks, and anything of in between startup and tech kind of just taking place. So I believe this. I think it's really cool. It's these events are a great opportunity for business owners and anyone who wants to dive their feet into getting into business or trying to find a new job, or even to just network with affluential people. I think it's a great opportunity, and I think it's even better for the current chair of the SEC to go to DC in particular and kind of just give this statement, because again, this is day and night difference with what we saw in the last few years with the past chair being Gary Gensler. So and he is absolutely right. We are 10 years behind, because right now it's 2025, and around 2015, one, we saw Ethereum come out. Two, Japan was already on path I think they were one of the first few players, if not the first, where they were giving, clarity and regulation on how to use crypto for everyday user, how to buy crypto in a safe manner, and even passing legislation that enforced consumers and businesses to engage in this kind of business in a safe way that everyone can kind of flourish. So we'll see what happens. They don't really get into any specifics here, so this is where I'm gonna stop talking about this. But again, we'll let you guys know if anything develops according to this. That's pretty much most things that we've talked today. Our last story here, we'll talk about Kraken's $100 million acquisition for the U.S. derivatives push. And U.S. derivatives push has actually in this year, we've seen a vast adoption into different market adoptions for crypto. We have the most pro-crypto legislation and administration ever in this country. And you know what? Crypto is only almost 20 years old. I think it'll be 20 by the time it's 2029 because Bitcoin is the one that essentially kicked everything off. So we now have prediction markets that was pushed by Polymarket, and then Kalshi followed suit. And then, funny enough, Kalshi was backed by YC a few years ago, but they never really got to market until recently because they were first trying to do it with crypto. But, given the last few years, crypto adoption and the way to create a business, it was extremely hard. And I really hope my case kind of makes you understand how hard it was, just money-wise. Polymarket comes in. They're not really within the US. They're not allowed to be in the US, but they're still in crypto. So people who were in the US could use a VPN to connect to their service. And then, they're vastly crypto based. And then Kalshi tried to do the same, but they weren't able to. So now they're really just dollar based, or fiat, if you will. But what I'm trying to say here is, crypto really adopts any market to go tokenize or to go on chain, or as I like to say, on chain for being on the blockchain, because money is just a lot faster, a lot more affordable or cheaper to move around when it comes to being on a blockchain. But that's just how I feel. That's just how other people feel as well. But let's actually talk about this derivatives push. So this is from Salem, Web3 Salem. He gives a lot of weekly updates as well, and go like his content. It's pretty good. So among these, he talked about Kraken acquiring the CFTC licensed small exchange for $100 million. And it mentions that Kraken is planning on a potential IPO by 2026, which is funny because we covered a social ledger report earlier this year in like April, May time. And Kraken was already by then planning for an IPO, but I guess now it got moved to 2026, so that's kind of interesting development. So this is from Yahoo Finance. Kraken buys derivatives platform for $100 million. Let's dive into this article. We won't read it all. You can read it all if you like. We'll leave the link in the description below if you're tuning in on YouTube. Kraken has purchased the derivatives platform Small Exchange from IG Group for $100 million. Laying the groundwork for the crypto firm to launch a fully US-based derivatives product suite. The exchange announced Thursday. So that was October 16th. Acquiring Small Exchange, licensed by the Commodity Futures Trading Commission, or CFTC, as a designated contract market, will allow Kraken to design and create markets to exchange listing derivatives stateside. This step connects spot, futures, and margin products inside a single regulated liquidity system, and reducing fragmentation, lowering funding latency, and bringing onshore the kind of access and performance that has mostly existed offshore. Kraken co-CEO Arjun Sethi said in a prepared statement, quote-unquote, under CFTC oversight, Kraken can now integrate clearing, risk, and matching into one environment that meets the same standard as the largest exchanges in the world, end quote. Kraken now operates regulated derivatives businesses in the UK, EU, and US, spanning 6 fiat currencies and more than 450 digital and traditional assets. And the last thing I'll read here it is, together, these elements create a network that moves collateral in real time, nets exposure across jurisdictions, and reduces capital inefficiencies that have long held back the US traders. Sethi said, this is not about marketing or narrative, it's about building better market structure. Traditional finance is moving on chain, and for better or for worse, some people are taking advantage by insider trading, others are actually building businesses that help everyday consumers and everyday investors by simply using the fast, rapid network of blockchain. You don't need to wait business days. You don't need to wait for the market to open Monday morning at 7 a.m., Eastern time or whatever. Or I think it's 8 a.m., my bad. This is truly why we love to cover everything here crypto related on Social Ledger Report and my business, social market, why we like to do all of this, because we're kind of in the middle of transitioning to a better, faster network or better, faster financial system. And it's kind of like where we are right now as well with AI, where AI is kind of in the middle of shaping a lot of like the work culture, the work environment, where some workers are going to lose their jobs and possibly their livelihoods, which is terrible. But crypto on the other side is actually making money better for everyone. So this is why we opt in for crypto. But anyways, that's just my take on this. But this has pretty much been Social Ledger Report. Don't forget to like the channel, like this video, subscribe to the channel, click that bell icon. It costs you nothing and it helps us to keep going. Dislike this video if disliked it for any reason. Give us your feedback. If you guys want to see anything specific, please let us know. So yeah, this has been JR, who's the founder and CEO of Social Market. And check out Social Market if you want to get crypto coverage on your crypto from hacks and scams. Anyways, thanks for watching.